Hi, everybody. I'm Courtney Thomas, and welcome back to another episode of the Stock Medic.
I'm Dr. Sandy Kovrig.
And today we're going to discuss the rotation, the market sector rotation. We're going to discuss the rotation from tech to value, back to tech, and now we're seeing evidence of them rotating back to value on the value trade.
And we'll talk about all this right after the intro.
Welcome back, everybody. Stock Medic. So, Sandy, we've been trading all day, right?
Yeah, we had an okay day.
It was a good day.
It's a good day for you, I hear.
It was a good day for me. At the end of the day, the P&L sheet was looking pretty good.
That's great.
But, I've been buying a lot of oversold stocks, and I try to get to them ahead of time,
Yeah, you're really good at that. I've noticed that, knowing you for years now, you're really good about finding out what, by the chart,
Right.
technical analysis, what stocks are going to do.
And, one of the big things is that it took me years to learn, a lot of years to learn the secular rotation,
And we were noticing that today when we were doing our trades. It looks like there's another rotation in progress. And one thing I did, I looked, did a little research. And according to Investopedia, James Chen was saying that, sector rotation is the act of shifting investment assets from one economic sector to another.
Right.
And then, as we were trading today, you said there was back in February, there was a shift.
Right, because they shift from tech to value. They were selling stocks like Workhorse, and they were buying stocks like JP Morgan, right?
So I was caught on the end of that Workhorse.
Right, you came in, you started trading just as the sector rotation was happening.
Yes.
Right? So, it's hard because you're thinking, oh, this stock sucks, right? This stock's no good. Because they were selling Apple, right?
They were. I thought Apple was no good.
Apple's
Workhorse,
a good company.
Yeah.
Right? Workhorse is a decent company. They've got a lot of things coming. But the problem wasn't you or the stock. The problem was they were switching from tech sector to value sector. They were buying Home Depot. They were buying JP Morgan. They were buying 3M. So when that happens, they're going to pull the money out of tech where they made the money,
right,
and they're going to put it in the other sector.
So one of the things we noticed was, some of our stocks were doing as well that were in the tech sector today.
Right.
And whereas JP Morgan, I know we were looking at that chart earlier.
Right.
JP Morgan, is up.
Well, here's the thing. Probably 10 days ago, they started selling value, and JP Morgan would represent value. It's got a PE of 11.99. So,
and something you've always told me is under 20. You want to keep it under 20.
PE under 20. Good value company. These guys actually pay a dividend, EPS 1260. So if you're holding the stock, it's a value stock. It pays you a dividend to hold it. However, that doesn't mean it won't go down.
Oh, right.
And as you can see here, they've been selling this thing. And they sold it down to, 147. Right? So evidence today, though, is that they're buying it back again. And you can see here, right there, you can see they're buying it. So they're switching again back into value.
And so because in this particular chart, we had such a sell-off over the last few days, now it was a great buy because it's on sale.
We're buying the dips. That's what we do. We love buying the dips,
we do.
right?
I love buying the dips.
So, this thing went from 175 with a 167 down to 147. So like a $20 move in 10 days. This is JP Morgan we're talking about. Right. So if they're shifting back into it, the money managers, the hedge funds guys, we should also do the sector rotation and follow along.
That's perfect. However, something that we had discussed earlier was that we still have some tech stocks that are doing well.
Right.
And you mentioned that, even in February, there was a little bit of a shift where some of the tech stocks are doing well as the value stocks are going up.
As the value stocks started going up, you can see some tech was going up, but a lot of tech was being sold.
Right.
So you really have to know when the rotation starts, and you really want to be a part of the rotation.
And so you really are going to, the next few days, I'm guessing, we're just really going to have to pay attention to the stocks, make sure that we understand what sector they're in,
right.
and, what's happening.
Right. You want to buy the stocks that are in the sector that they're rotating to. Because if you're buying the stocks that are in the sector that they're rotating out of, you're going to have a hard time.
Right.
It's not going to go up.
Right.
Nothing
so we
wrong.
Want to catch the trend.
You want to
trend is our friend.
The trend is our friend, and the herd is our friend. We want to kind of shift with the herd as well, So we were buying JP Morgan today. You bought it, right?
Yes, I did.
You bought calls?
I bought, I think, 4 calls.
You bought 4 calls in JP Morgan. My guess is, as the days and weeks goes ahead, you're going to see JP Morgan move up here from the 146, where it's at now, 150, to maybe 157, 160, maybe even beyond 160, because you're going to notice that they're going to be buying more of it and more of it. Now, we still have some tech plays on.
Right.
That the charts are still good. You bought a couple of tech plays today, right?
Well, I bought Workhorse.
You bought Workhorse.
I bought Clover.
Clover, yes. Well, let's look at Workhorse and see why you bought it. Number one, this thing is sold down over here at the very high. It was at $40 in February. Mm-hmm. And you can tell right here at the peak in February, and then it just started going down. Mm-hmm. To now, it got to about $750. Mm-hmm. And then you could see buyers coming in. So
I actually held it for a while. I did really well.
Right.
And then I realized it had run out, and so I jumped out, and now I'm back in.
Now we're back in, because it looks to me like this chart wants to go higher. And you can notice that the tech sector in itself wants to go higher, but you got to keep your eyes on the value stock. Don't lose your eyes. That's why you want to start buying those. You want to start buying the JP Morgans. Mm-hmm. You want to start buying the Home Depots. Start buying the Citigroup, Goldman Sachs, 3M. These are value names. Citi, they're going to go higher, and not only that, they're going to pay you a dividend. So we can play the tech sector, but we got to keep our eye on the rotation.
All right, that sounds good. Okay. One thing else that we did today was we did a little bit of bottom fishing. So, Torch. Now, Torch had gone up over the last few days, but then it suddenly sold off.
Torchlight Energy, company out of Texas.
Right.
Natural gas drilling, pipeline stuff, right? Mm-hmm. And the reason, it went pretty much from 2 to 10, like straight up, right? And then the company saw this as a good opportunity to raise some cash. I think they raised $100 million or something.
Oh, wow.
Right? But they did a at-the-market secondary. So, but it really doesn't matter where they do the secondary. Usually it's going to get sold off.
So what do you mean by secondary?
Well, the company offer more shares to the market, to the public, or maybe to a syndicate to buy it, and they raise some money. In this case, they raised $100 million.
So a secondary offering
of shares.
Okay.
Right? And what they usually do with this money is, investments into the company, research, development, and so on. So it's usually good for the company if they use the money right. So that's what Torchlight did. And the stock fell from 11 to 5.
And that was because there were more shares and that diluted the...
Right, they diluted the current shareholders. Okay. And it's an automatic sell. Typically, if you're in a stock and they do a secondary offering, expect it to go down.
Okay.
But it's important to know why it went down. And if all it is an at-the-money secondary offering and not some real bad news, you can buy the stock. We call it bottom fishing. Right?
So we even checked after the market closed today, and it was already up.
And it's already up after the market closed. So sometimes you can get these, you can snag them on the bottom. This one was at the 20-day moving average when we picked it up. Mm-hmm. The 20-day, 21-day moving average. I think it's a good buy. It's already up. You're already making money on it. Thank you so much for joining us today.
If you've heard anything you like, please subscribe And make sure to hit the notification bell so that you know when we come out with a new video. Also, destroy the like button.
And if anything that we said here today brought value to you, please consider joining us in a private trading group via the Patreon app. The links are below.
Until next time.